This is the MT Predictor Weekly Update for January 8th. It's been a while since we've done covered the markets here, since after the holidays. So hope you had a great holiday, and we're back at it here. Last week I did send out an important blog post you can get at MTPredictor.us regarding the data that FXCM collected on 12 million of their clients' trades, and the bottom line was that they found is the majority of their clients were correct in their analysis, and they had winning trades that were in all the pairs greater than 50%, and some pairs as high as 70% winners to losers. But what they also found is that the majority of their traders were losing money, and the reason they found for that is that their clients were taking small wins and big losses. So I think they would take something like 60 some pips profit, but on their losers would give back 120 plus pips. And this is 12 million trades that they've covered. So make sure you go to the blog at mtpredictor.us and look for that post. So it's an important one, probably the most important trading article that you can read all year. And I'll probably take you to that web page at the end. But let's get into the analysis here. Again, this is the weekly Dow chart. I'm using the Ninja 7, the MT Predictor add-ons for Ninja 7. I haven't done this in a while in the weekly update. And so we'll go through this. This is the Dow again weekly. And you can see that we've got an ABC pattern that's formed. The STF, our trend, is now to the upside. And the important thing to note here that we've been looking at for quite a while, weeks and weeks and weeks, is that this swing high here, where this A swing has not been able to get, had not been able to be taken out. The high there was at 12,228, and I've given you that number a number of times in the past weeks. If the Dow got to that number, and we'll look at the S&P because it has to get to its number as well, then the bias would be to the upside. We've got an ABC pattern here. We've come into well, in fact, you can see there was a short signal there. Again, you avoid short signals when the trend is up here, so it's one we'd avoid. But if I put the analysis on, you can see we're in the minimum wave C resistance here. The trade would have never been executable anyways. It never got to the entry here, and it's since made a new high. But it has taken out that number in the YM, and that is significant because it's something that the markets have not been able to do, at least the YM has not been able to do, like I said, in a good number of weeks. If we look now at the ES, okay, here's our weekly chart of the ES. You can see here's that significant swing high. So if I put the analysis on back down here, you can see we went wave 3 down, so we had our major decision point sell signal. Up this was wave 5, came down, became wave 1, into wave 2, down to wave 3, up to wave 4, and we've got an ABC that's formed here. And you can see this is wave B, and we can project up wave C using the tools. Up wave C, just need to make 3 clicks on the chart here, 1, 2, and 3, and there's the wave C targets, and that'll sit, let's put the crosshairs on, right around 1294 in the ES. Okay, if they can get there, that would obviously take this significant swing high out. Again, we've been looking at that number, that's 1289.25 in the ES. They still have not, whereas the Dow has taken out its swing high, its wave A swing high. The ES has not, and remember I talked about both these markets have to take out those numbers for it to mean anything. When it's mixed like this, it's really giving us a mixed signal. So we'll see if the ES can make it up there. If not, then the ES is the boss. There's 500 companies that make up this contract, and the Dow is 30, obviously. So this is going to carry more weight. So just because the Dow has reached its number, but the ES has not, so that's if both numbers do, obviously we're going to have new resistance here because so much time has gone by now. We've got new patterns that have, and then off our swing here, the next major DP resistance will be off this prior swing where wave 2 was. Here's your minimum, right around that 1294. Your typical wave C resistance, right around 1360, 61 area. So obviously they'd have to make it through these areas. If we get to this bigger area, we would have made new highs. This last high was back in May of 2011. So we'll see. The key is whether or not the ES will be able to take out this prior swing high as the Dow has taken out its. If not, again, we're looking at sideways to potentially lower action here. And here's the weekly chart of Goldman Sachs, and you can see it's still, we've got our line in the sand. Here's the $100 level in Goldman, and the stock has been struggling to get back above 100, so it remains weak as far as it's below that $100 level. You can see obviously the bigger trend is down. That's the red SDF here, so we'd avoid any long trade setups here. If this were a major swing low, it's not really in the grand scheme of things. This may be a trade we'd look for wave 3 up. This would be 1 and 2, and then into wave 3. It's not exactly what we have here, though you do have a trade setup that in the opposite direction of the trend. It's not one that we'd look to take, but it may give us a push because we're at some support here. We may get a bounce, see if they make another run for that $100. If we do, we'll probably see the ES trading above its number that we looked at, that it needs to take out that prior swing, that A swing. We'll see if Goldman can make it back above $100. Again, that makes the overall markets more bullish. Goldman below that is going to be more bearish. So we'll have to continue to watch that. Alright, on to the weekly chart of gold here. Obviously the bigger trend is still up. We had a high volume spike on this pullback, tells us maybe buyers are beginning to step in. There's a potential trade set up here. We need a blue buyers bar telling us, confirming that in fact buyers are overcoming sellers. Don't have that yet. We'll see how things open on Monday. But gold on the weekly chart has a potential long setup, again below the 50-day or 50 period moving average, I should say. Okay, so here's the chart, the weekly chart of gold. You see it has come below its 50 period moving average. That's the red line here. It's above the 200-day. So as far as the weekly goes, this is still a bullish chart. You see the bigger trend is still showing up. That's the blue STF here. We did get a high volume spike on this last pullback, telling us potentially that maybe buyers are stepping in here. We've got a potential trade set up there to the long side, though it's not been confirmed yet. We need a blue buyers candle to tell us that buyers are overcoming the sellers in order to set that up. So we don't have that yet. So that is gold on the weekly chart. We'll see if we get some support in there. And then let's just take a look at silver. We had our silver short. Where's our SI? Here you go. Let's let that load up here. That's the weekly silver. We want the daily here. Alright, so here was our daily short on silver. Put the analysis on there, and you can see how close we've come to the target for almost 10R profit. Here we are currently, at least as of Friday's close on that. Some selling coming in again. Obviously the bigger trend is down here. So we will see if they can eventually move down to the target, which would be at 25, basically 25.20. So for an excellent trade, even if you took the decision point off the B swing here as a potential profit taking area, you still have a very nice profit. We'll see if we can get to the target eventually here. So everything's still saying short in silver at this point. and we'll see how that continues to play out. And then let's check oil. We did have, I think, a long on oil there. Where's my CL? This is the daily chart here, the TS3 setup here. Okay, so that hit the target up there at 103.28. We talked about that last week, and has come off that resistance area and pulled back here. So to be expected. So been a nice trade there on the daily oil for 4.5R, or 4.5 times your initial risk. Again, that's the whole key, as you'll see. Let me get to that. I'm just going to pull up the website here. Let me bring this in. This is the MTPredictor.us website. If you haven't already, you can get the free trading course. That's right here. Just enter your name and email and click submit, and we'll send you the PDF file here. Explain the software, all the setups, the support and resistance areas. If you purchase the software, you get part 2 of the trading course. But what I wanted to show you is one of the blog posts here. The most important trading article you'll read this year. Just click on that. Here's the my blog post. The actual article, if you click there, will take you to the FXCM article with the data that they did. If I click on that, below that's my thoughts on some of the comments on the article here. But if you go through this, what's the #1 mistake forex traders make? And you can see the data. It's a very simple, easy to read article, just the facts, ma'am, and you can go through that, and then their analysis and their solutions to that. But an excellent article that was done in a great study that they did, confirming basically what we've known for years, but didn't necessarily have 12 million trades to confirm that the biggest problem, traders are losing money because they have small wins and big losses. Alright, well that'll do it this week. Not a whole lot of economic data this week until Thursday. The jobless claims and retail sales will be out. Those will be the kind of the big ones to watch. Volume is starting to come back in, especially early, and a lot of this is volume coming from overseas. As soon as the European markets close, volume really dries up, so something to watch. Anyway, we'll do this again next week and see what kind of progress we make. Take care, and we'll see you next Sunday evening.